Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, you want to start off with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our stock market technical analysis trading plan. In our video, we'll look at the past week's economic calendar and also look forward to next week. We'll see what happened as far as the most recent price action to identify key support and resistance price levels. We're going to look at the charts of the market leaders, Apple, Google, Goldman-Sachs, Priceline. We'll take a look at those. We'll look at the dollar, gold, and crude oil charts to see if there's any leading sentiment. And finally, we'll have an education spotlight at the end. As we look at the week that was, we can see all three major indexes, the Dow, the Nasdaq, S&P 500, all ended up for the week. We're not as much down as we were before. For overall, we saw the market finding support at the August lows, and overall we see the market basically staying within that range. S&P 500 basically around 1180 down to about 1120-ish. We'll talk more about that when we come to the charts, but the market has been ranging since August with little blips up and little blips down. Overseas, not a lot of news going on. The European Central Bank did decide to keep its lending rate the same. That wasn't received well. The British, they did keep the rate the same while raising their asset accumulation up about 75 million from 200 to 275. Well, overall, not much going on there. Corporate news, I'd be remiss not to mention the passing of Steve Jobs, the CEO of Apple. And clearly, it is my opinion, and it should be widely accepted, that he is going to be one of the greatest innovators our country has provided, up there with Thomas Edison, Henry Ford, Walt Disney, all these people who changed our lives. And clearly, Apple has done that. Whether you like Apple or not, you have to admit the impact that Steve Jobs and his company has had on our daily lives. Economic news: the September jobs numbers came in better than expected. Some of that could be tapered by the end of the Verizon strike. However, the private jobs definitely came in higher than expected. But it was tempered. The market pre-market on Friday was up after the news of the non-farm payroll employment situation. And then we sold off from there, and then we kind of rallied back to parity by the end of the day. So what we're seeing again is the market not really having a catalyst. And take a look at next week. What's important about next week is that our next round of earnings seasons begins. We have Alcoa on Tuesday, JP Morgan on Thursday. But look at the economic calendar. Remember, Monday is Columbus Day. The banks are closed, but the market is open. Nothing on Tuesday, nothing on Wednesday. Crude inventory from Wednesday's moves to Thursday, nothing on Thursday. And then we do have consumer sentiment on Friday. So what that's saying is, as we look for catalysts, most of the economic data hasn't been good. So how is that going to break us, especially for our bulls, to the upside? However, if these companies start breaking in earnings and showing that they're still making money, perhaps the market will take that in a good way and break out of this range back up to the highs, or they may disappoint and send us back down to the lows. Let's pull up the charts and talk about this consolidation and range that the market has been in. Here we are starting off with the S&P 500 daily chart, and you can kind of see where we did extend below the August lows. Here's our August low right here, and we basically hit that and then came right down and broke up, made a hammer out there. So we tested the August lows, we tested the support, and now we're starting to consolidate a little bit. Will we make another run up to the 50 moving average? We don't know. We need to go ahead. We see the 50 moving average as resistance. We'll go ahead and draw a trend line also. Just to get a gauge of what's going on here. You can kind of see, even though we haven't made it to the 50 moving average, you can kind of see that if we do get above this price level here, let's go back to pan. If we get above this 1180, which is a familiar price range, if we get above that, we it would make sense for us to test 1200 and the 50 moving average. Our downtrend line here from August will break that, and if we can get some volume behind that, we can probably make a move. Now, we can see on the indicators that they're basically sitting in neutral, and you can say why? Well, because even though we have our dip out of the range, we primarily have been in this range of 1120 to 1180 for about 2 to 3 weeks now, with some minor blips in and out. So you could say we have a descending wedge. Our downtrend lines in August, the 1120 that we're watching, 1125 that we're watching as support, and eventually we need to resolve ourselves one way or the other. We also need a catalyst. Maybe earnings seasons will be that, maybe it won't, but you can see the range that the market is in. It makes sense to go up here and test 1200, test the 50 moving average, and to come right back down if we don't have a catalyst to keep the market going higher. As we zoom out to our weekly, we can see a little bit better of this descending wedge that we're talking about here. And what I was looking for is to see if I could zoom in for you, using a different platform right now. But you can see the descending wedge. Again, we need to break out of this one way or the other. The support of the 200 moving average on the weekly is also holding up currently. Indicators, we're trying to go lower here. MACD trying to go lower. Stochastics and RSI heading higher. Either way, they're neutral. Why? Because this is showing even more weeks of where we're really just gone side to side, basically since August, testing the lows and gone back up, testing the 50 moving average. Zoom out one more time to the monthly, and we see what we have here. Our downtrend line is still there, but now we have the 200 moving average, which held up as our last pullback point here, and now we're pulling back to it again, and it's holding up. So as long as that 200 moving holds up, we can still say nicely that we are in this uptrend from the 09 lows, but again, it has to hold up. Indicators here are have rolled over. Stochastic way ahead, MACD and RSI rolling over, so there's still room to go lower on the monthly. Now, as we go back to daily and switch over to the NASDAQ, we can see the same choppiness on the daily chart here. 2350 acting as support, coming up and testing 50 moving average. 2550 as we come up here. Similarly, if we draw our downtrend line somewhere in here, whoops, you can actually see we have a little bit further to go to break out of it. Basically, our downtrend line and the 2550 lines are together, and that would be a break of the 50 moving average to run up here to the 200 moving average. Indicators, MACD's up in the middle, RSI is kind of in the middle, so we're getting sideways action again because we're seeing that in our price action. Zooming out to the weekly, some of the same information here. And again, you can really see the descending wedge. You can see the 200 and the 2350 acting as support. So we'll have to see, again, what's going to be our catalyst to move higher. Here we can see the indicators moving lower. So we're getting a little bit oversold on the weekly. And then finally zooming out to the monthly on the NASDAQ. We can see the 50 moving average acting as support. We see our pullback that we need to honor. And there's more room to go lower on the monthly. So we may come down here and test the 50 and the 200 on the monthly. But overall, the Nasdaq is a little bit higher than the S&P 500. All of that is the same. Really, nothing has changed over the past couple weeks. Again, we've been in sideways action. Will the market finally move us to a new channel that we can trade, that we can trend? We are starting off as we look at our market leaders with Apple, and we can see what the story remains the same, which is truly the market has been in a range since August. Really, if I took this and drag it up here, you would capture more of the range. Take a look. So you can see that captures more of the range. So overall, the market is ranging. We got a little blip out of it, and now we're back in the range. And again, how is the market going to perceive Steve Jobs' absence? Like the market, you can see a bounce here off the 200 moving average. All of our indicators, though, here are weeks, though. So we'll have to see what happens. What's going to be our catalyst to move us up and down? Probably will be earnings. Next, we'll go to Amazon. Again, within the range, a little bit wider range here, but certainly we could have came in here and drew something somewhere along in here if we wanted to draw a smaller range like the market. We got the blip out of it. Now we're back into it, testing it. We could come in here and draw a trend line. So this one we would say sideways to up. Apple, we're saying sideways. Amazon, we're saying sideways to up with a potential here to break out. Let's go to Google. Google, certainly sideways. We could come in here, draw a line. There's our range. Not a lot too much coming out of it, but definitely sideways on this one. Google, sideways. What about Goldman Sachs and our financial? With Goldman Sachs, we see our beautiful downtrend line here, 20 moving average acting as support. If you wanted to, you could draw in a little line here to support a descending wedge. But overall, the 20 moving average acting as support. And what's going to be the catalyst to move us above that? Again, maybe earnings will do that. But with the economy and financials being tied in so much with the economy, maybe not. But definitely a beautiful downtrend. Goldman Sachs down. What about Netflix? Netflix, again, we talked about this last week about this huge drop that Netflix is on. And then we have our earnings gap down, and we've kind of started at least finally base a little bit. Again, I'm one of those folks who also said, what the heck was Netflix doing changing our pricing policy? And I did not double up. I only have one. I kept it streaming. So, the market's still breathing that in, digesting that. And again, earnings, if their earnings come out and show that their new pricing model work, you will see Netflix begin to take a tear. That's the time to really start looking at getting into Netflix, when they start to show that the new pricing model is actually going to work. And finally, Priceline. With Priceline, we can see that we're in a similar sideways action. We've got 450 as support, little downtrend line we're watching at 540. But overall, we see a sideways market. You might say sideways to up. Some may say sideways to down because of this last move here. But we stayed up here at the top a little bit longer than the market did. But overall, it's sideways. So that's Apple is sideways. Amazon was sideways to up. Google sideways. Goldman Sachs down. Netflix sideways to down. And now we're saying sideways for Priceline. That's in agreement with the market. And so what we're hoping for is that our new round of earnings will give these stocks, for our bulls, the catalyst to move higher out of this range, or for our bears, be disappointing and move us down out of the range. Now let's take our other market sentiment indicators with gold, crude oil, and the dollar, and see what they're telling us about the market. All right, so as we look at gold, we see a similar price action of consolidation here for a couple weeks. Market is breathing. The global economies have not changed, and so gold, there's no flight to gold right now. And so we get this sideways price action, 200 acting as support. Also watching around 50 as support, with the top being at 1680. So about a 100-point range that we're watching the market cycle in. And again, if the earnings start turning in bad, you'll see a flight to safety in gold, and we'll see gold go back and retest the highs, or we'll see gold make a pullback. But keep in mind, as we go on gold, and as we zoom out, here's a weekly. I mean, gold is still on a tear. Even with this pullback, we're not exactly scaring some people. I would say to start scaring some people, you might have to break 1450, because that is the last move higher. So these people, anybody bought here, they're still okay. Next, we'll go to crude oil. And I got to change the setting here, so just excuse me for a second. There we go. We can see this nice downtrend line. I'm still on the weekly, but you can see what's going on. Nice downtrend. Some support trying to hold up here in the $75 range. $75 range doesn't really match up with this, whatever's going on over here. But there is definitely some support here. So we'll have to watch and see what happens here as we get closer to the 200 moving and its resistance, whether or not we pop back down. So crude oil is trending lower. And then we're going to finish off with the dollar. And the dollar, easier to see in the weekly here. Still in the weekly. We broke this downtrend line that was all the way back to 2010. Slowly, we went sideways. And as the market is now consolidating, dollar is getting stronger. Keep in mind that inverse relationship. Strong dollar, weak gold, weak stock market. So as the dollar continues to get stronger, that is hurting our market just a little bit. But we have some resistance coming up here just above 81. So overall, with our market sentiment leaders, gold consolidating, also waiting for some type of catalyst in the market. Crude oil is trending lower, which is good for the market. The dollar, though, is strong, and that is going to hurt the market. So we are moving on to our education spotlight, where we've been talking about trade plans, what they are, what should be a part of them. And today we're talking about managing yourself. Because even though you know you need to have a trade plan, you have to have the motivation to actually complete it. And that means doing all the back testing, defining all your objectives, knowing what your goals are, examining yourself, and really being honest about how much you need to make, how much you need to save, what is your true risk tolerance, being honest all that. And you got to be able to manage yourself and keep yourself motivated and disciplined to follow that trading plan day after day after day, doing the same thing day after day after day, and only making adjustments as the market adjusts. And more importantly, continue to develop those skills required to be successful in the current market conditions. And so that requires motivation, and some people just aren't motivated. They're looking for that quick solution. They're looking for that tell me now, tell me now, tell me now. It's the tortoise versus the hare. Some people want to be the hare, rushing to the finish line, while other people are taking it slow and steady, and those are the ones who win the race. As you know, you can find us on Facebook, YouTube, and Twitter. We have our free video course on high probability trading setups. Really just gives you a framework for how to design your own high probability trading setups. And we hope it gives you a gauge of who we are as coaches, how we can help you one-on-one develop that motivation, that discipline, that trader's mindset to be a successful trader. We do have our high probability trading course, not $5,000, $2,000, $3,000. It's got all that same information, takes you from the introduction to trading all the way to how to define your trading plan and then how to implement your trading setups. But we really have it at an affordable price because we want you to focus on the coaching so that we can help you take it to the next level. If you're trading futures, we've got a great broker for you. Intraday trades as low as $300. 20 free trades if you sign up to us. And the charter package, sort of like what you just saw there, works on both PCs and Mac, and allows you to run your scans so that you can find your fast-moving stocks. But in the end, it doesn't make a difference about your system or your indicator if you don't pull the trigger. If you haven't back-tested, if you're not motivated and disciplined, your fears and emotions will take over, and you won't be a consistent, profitable trader. Thanks, guys, and I'll see you next time.